Hello, everyone. Thank you for coming to the Carlsbad Vesta meeting where we're going to be talking about hidden assets. My name is Cinda Jones. I'm a certified financial planner and a certified divorce financial analyst. Been a member of the Vesta hub for 2 years, and it's a strong group of very professional advisors that can help you. So you know that you're entitled to a consultation with any of us if you like, because you attended this presentation. The role that I play in divorce is the financial side of it. I've been doing divorces only for the last 20, 25 years. I don't do traditional financial planning. I just do settlement analysis, help people divide retirement accounts, stock, restricted stock, stock options, and trace money. Sometimes in mediation, sometimes in a litigated context. But when we talk about hidden assets, usually people suspect that someone has peeled off some money for their own benefit and it can't be seen by the other person, so it can't be included in the community property. And sometimes people do that, not very often. But one of the things that you want to keep in mind if you're going to be looking for hidden assets is what is the cost of looking on and potentially finding, or maybe looking and then not finding. It's very expensive to pay someone to do forensic accounting examination of people and their financial matters and their accounts. Sometimes it pays off. I had a case a couple of years ago where one person presented their retirement account and said, well, that's it. But there was something about the statement that didn't look exactly right. So with a little more investigation, and in that case, my client paid for a private investigator, they found that the husband earlier, before the divorce started, had taken a lump sum distribution of his retirement plan. And that would have shown up eventually on a 1099-R. But it's the kind of thing where you're looking at a statement, but are you seeing everything? I suggest that people look at tax returns and comb through those tax returns. Sometimes people will create partnerships or a business and they'll give it a name that you might not recognize or know anything about. So if you see anything on a tax return that has a name or a tax ID number, a 1099, and of course W-2, then you would want to know what is the source of that financial information. Sometimes people will transfer assets, money to family members, friends, sometimes to girlfriends, boyfriends. And so the way you might find those is to get all the bank accounts that someone has. And they don't always disclose that when they fill out their declarations. So you would want to, again, look at the tax return and see if there's accounts there that you don't know or recognize. If they transfer it to a family member, boyfriend, girlfriend, and it's cash, then the way that you might see that is to know how much money came in, how much money was spent, and then where's the rest of it. So sometimes it's just a matter of low spending, high income, and no assets that have been accumulated as a result of the high income, low spending. Those are always suspicious. I've seen those with people who work out of the country and travel. They sometimes the couple will show up with community property of very low asset amounts in checking and savings and investment accounts, but the person was earning a high income and the family or the spouse was very restricted in what they can spend. That's sometimes a tip off that there's hidden assets somewhere that may be out of the country or may have been passed on to another family member. Or they may have created a partnership or an LLC, and the money is in those entities. And so if there's hardly any tax consequences, then they can just hold that money in those entities. So you want to see all tax returns, business tax returns, personal tax returns, any entity that's on there on the Schedule D, on the Schedule E. You want to know what those are about. If you think money may be hidden in real estate, you can go to the county assessor, but depend on where they bought the property. If they're in another state, it might be hard to find it. But in California and San Diego, all you have to do is go to the county assessor. You can even go online. You can do a search by name. You can do a search by parcel numbers. And so sometimes you can see real estate that might be hidden. It's not easy to hide money, but if people are determined and they want to, then sometimes you'll just never find it. That's all. So that's why you have to really think about what's the time and effort that goes into it. If someone's an employee, you want to see their year-end pay statements, not just a W-2. A W-2 will tell you part of the story, but it won't tell you everything. You need to see that year-end statement. And because there can be bank accounts, checking accounts, savings accounts, investment accounts where money's being peeled out of the pay statement. And the other person might have been told, well, I only bring home, I don't know, $2,000 a month, but they're actually earning $10,000 a month because the money is being transferred to an account, maybe friend, girlfriend, brother, sister, somebody else, and then that account wouldn't show up on your own tax return. But the person then who's transferring that money to really has to trust the person that's getting it. Although you can have a joint account, and in terms of banks and savings accounts, it may not show up in the second social security number. So one person could be the primary, the second person could have access to the account, but the tax reporting goes to the primary person. If there's a business involved, then it becomes more critical to, one of the tools that you have in a business is the general ledger. And maybe the fear of the business owner of being audited and not reporting, but auditing has been happening very much over recent years. But when someone has a business, you want to look at the general ledger. You want to see who the employees are. Are there, if it's a very large business and there's many employees, then that could be difficult. But if someone has a friend, a family member, a girlfriend, and they want to just pass along money to them, they can create an employee status for that person, and then the tax reporting would show up on whoever received that money. In a business, someone can set up a false vendor, another company, a partnership, an LLC, where invoices are submitted and then the business pays that invoice, but it ends up in the owner's pocket someplace else in a different entity that may have other shareholders or other social security numbers connected to it. So you can see how it could be really expensive to have to go through the general ledger, the profit and loss. You want to see that the profit and loss ties to the general ledger. You want to look at the balance sheet. Sometimes when business owners have a business, they'll make a loan to themselves. And so that debt it should be on the balance sheet, and you should be able to see it when there's an analysis done for assets in connection with the business and about income available for support. But again, the debt or the loan could be to another entity where there are ties, or a family member, or someone else, or a piece of real estate where they don't show up on the records for the real estate. So what you can do, as much as you can, is gather all the information you can about banking, checking, savings, investment accounts, businesses. If someone does a lot of travel, you might want to know where they go and how long they stay. So it's a matter of gathering records and then following that. If you get bank accounts, checking accounts, savings accounts, you can see wire transfers. You can find out where those wire transfers went to. You would want to look at copies of checks to see who the checks were written to, and then you want to find out what that entity was, or what that person was doing, and why they were getting that check. So it takes some careful scrutiny, and of course, all of that takes a lot of time. So we've talked about looking at tax returns. If you don't know how to read a tax return, go to the tax preparer and say to them, help me read this tax return. I've had cases where tax preparers refuse to give the tax returns to the other person who signed it. So a husband and wife sign it, and whoever is the major earner might just turn to page 2 of the tax return and tell them, just sign it here. That person does it, but they never see the tax return. And if you're a signer on the tax return, you have a right to see that tax return. You can order copies of tax returns for the last 7 years, but they are abbreviated forms, and what you want to see is the full tax return form. So that's what you would want to request. You can also subpoena documents if you're in a litigated situation. Hopefully people will cooperate. Hopefully that there's mutual understanding if you do mediation or collaborative, that there has to be that fundamental guiding post that everything is going to be disclosed. So the person who's been managing the money may feel insulted or upset because they're thinking, well, I've done a good job and now I'm being called a crook. But that isn't always the case. In fact, it's often not the case. It's that one person knows and the other person doesn't. And the person who doesn't have the knowledge or see how managed was money, how it was managed and where it went, then they want to know. And if they know, then suspicion and finger pointing can sometimes stop. So the more someone puts up barriers to providing information, the more chaos can be brought into the picture. And anytime you do that, the cost goes way up. And if someone doesn't cooperate, then there can be sanctions against them. But I'll leave the attorneys to those issues. So the job is to gather all the information that you can, even maybe if it's on a computer. I think there's legal rules about that, but you want to gather all the documentation that you can, tax returns, accounts, and look at whether or not money has left the accounts, who checks were made out to. If it's a business, who are the vendors, who are the employees, what are the expenses? People can pay for vacations and restaurants and take it as a tax deduction. We add those back when we're looking at income available for support in a divorce. But those are the key documents that you need to take a look at. So you're welcome to give me a call. I'm sorry I'm not participating in the hub meeting today. I had another obligation that I felt I needed to attend. but I would certainly welcome any phone calls or questions that you have. You're welcome to call me or email me. And thanks very much for coming. Take care.